We've seen the rand rallying nicely on the back of the euro, and risk, it seems, back on the table.
Yes, I think across the board we've seen a large rally in the euro. That's been the major driver. You've seen US data coming in pretty negatively, and that's been a change of trend based on the fact that we're starting to see some form of positive sentiment coming out of the eurozone. That being said, though, today we've had mixed sentiment. We've had some German newspapers saying that the IMF is unlikely to bail out Greece, and yet you've had Bloomberg and the likes with notices saying that they will be bailing out Greece to the tune of up to $70 billion. So very mixed sentiment in the market, driving euro down, back down to that 144 level, within that 144, 144.50 range. And that 144.50 really at the moment on the euro is where the resistance is going to come in. But once we see a break above that, we potentially can trade right up to 147.50 and even as high as 149.
Of course, while we've had all attention on the kind of movement we've seen on the euro and the rand taking direction from that end, we've also had the Walmart Massmart transaction now playing a pivotal role as well.
Look, I think it's sentiment, and as I've said before, I mean, sentiment ultimately is what drives this market. We haven't, I don't think, seen any of the actual flows come through, and in fact, there's a lot of speculation as to how much of those actual flows will hit the local market. That being said, though, it is positive in terms of the outlook for mergers and acquisitions, the outlooks for potential FDI inflows. There has been some mixed sentiment around the fact that there's the impact on the job market, etc. But the general sentiment around the deal seems to be positive, and that's been a rand driver. I think bigger picture, though, really is the fact that the dollar is relatively weak. The US data has been pretty benign, and if you look at the UK, they're also battling. I mean, the US housing market's not coming back online. Unemployment still remains a major issue, and you're going to see ADP numbers today, and then we've got non-farm payrolls at the end of the week, which offer the big event risks this week. So, you know, the rand is trading as a currency on the back of what's happening in the US, and obviously being bolstered by some of the positive sentiment that we're seeing out of Europe.
With all of that data flow, let's hone in on the US specifically. What are you anticipating when it comes to those employment figures?
I think there's a couple of factors in the US that are playing on people's minds. These, you know, you've got reapplying for higher levels in terms of their debt, which is a continued theme throughout the developed world. You know, that debt restructuring, or how they're going to manage this debt bubble going forward, is a major implication for monetary policy. It certainly has implications for central banks, and there's a lot of debate about which are the better ways to handle that. Should they continue to feed the machine with printing of money, or should they keep interest rates at lows when there are underlying inflationary pressures coming through? And these are the kind of things that are coming through quite significantly, specifically as we come to June, where we've got to now reassess whether or not we're going to see another round of quantitative easing in the US, and obviously with them reapplying for a higher ceiling as they look at their debt continuing to balloon out of control. So these are the kind of things that are playing on the US market. We're not seeing the consumer come online, we're not seeing the unemployment coming back online, and we're not seeing the housing market come online. And those were really the core of where this all began. And I think that the concern is we're 3 years down the line and it hasn't really changed.
And it's within that scenario that, you know, a whole lot of attention got refocused onto China specifically. We've seen PMI data filter through from China this morning, and we have some viewing it as a response to tightening moves, the lowering that we've seen on that end, while others still worry about the still high inflationary pressures that persist on that end. What's your sense of the state of the Chinese economy?
I think the Chinese economy continues to at a better and a more even keel. I think at one point there was a big concern that it was overheating, and the Public Bank of China stepped in and they did increase the reserve requirements, which at the time was quite prudent and seems to have done the trick. That being said, though, there are those underlying inflationary concerns, which the market is very cognizant and concerned about, but we ultimately do need some other generator in terms of this global market, because of the likes of the previous generators like the United States and like Britain and the Eurozone being under so much significant pressure, specifically around their debt.
Well, we've seen some data filter through on home ground as well. A PMI showing a tempering, but we're still holding above that crucial 50 mark. How have you read into today's numbers?
Look, I think that we can be relatively well supported by the fact that we're sitting at that 55 level. Yes, it was slightly below expectations. I think the concern, though, is that the two drivers of that were factory inventories and obviously the unemployment sector in that factory component, which came in relatively negatively. So those are the kind of concerns that I'm sure your analysts will talk to you about a little bit later. But nonetheless, as you've said, we are still in that expansionary environment. We're above the 50 level, and whilst we remain in that sort of environment, it still does bode quite positively. We had positive GDP out of South Africa yesterday. So, you know, from an outlook perspective, we're starting to see growth picking up slowly but surely. But I think in the global environment, we can expect a much more slower and even kill kind of growth trajectory than that V-shaped recovery we were all hoping for a year or so ago.